Well, hello everybody, and welcome to Nature Plus and the Accelerator Fund. This is going to be an exciting hour. You're going to be hearing about a very innovative kind of fund that's going to be good for nature. And it's a new kind of investment vehicle that's been put together by IUCN and the Global Environment Facility and Mirova Natural Capital, which is a fund manager based in Paris and in London. And we're going to be hearing from a whole lot of experts and speakers who know all about how to raise money to become more nature positive and less nature negative, because we're living in a world where too much money is nature negative and not enough is nature positive. And we're going to be talking about some of these issues over the next hour. My name is Andrew Mitchell, and I'm the moderator today. Some of you may know me from Global Canopy, an organization I founded some 20 years ago, but I'm now working for Equilibrium Futures, which advises the finance sector on environmental risk. And that's the big problem, isn't it? We need to change the movement of money. We're all drowning in too much money going around the world, but most of it is doing the wrong thing. It might be financing a food system that's causing the destruction of nature, financing infrastructure that's causing the destruction of nature, financing the production of energy that's creating roads going into rainforests or stuffing up our atmosphere. These are big problems that we're trying to solve. And at the heart of this lies one big fact. There is no number for nature. We don't have targets for nature like we do for the climate system, which in Paris came up with the idea that 1.5 degrees is what we should be shooting for. We don't have the equivalent for nature yet. And we look forward to next year when the Convention on Biological Diversity will be meeting and hopefully going to set some numbers. The other thing we don't have for nature is we don't have a currency like we do for carbon. It's called a ton of CO2, which allows companies to measure how they're doing and report on it, disclose on it. For nature, this is much more difficult. There's a new task force being put in place for nature called the Task Force on Nature-Related Financial Disclosure. And that's going to help, rather like the one for climate, to try and create a reporting framework so that we can help companies in the finance sector to do better on their footprints for nature. But in the end, it's all about money. We need a lot more money going into and investing in nature projects. And governments have tried to do that over many years, funding national parks and that kind of thing. But unfortunately, even subsidies are 5 times greater that are destroying nature than all the government money that's going in to try and protect it. So what we need to do is to find how we can work better with government money, but also bring in the finance sector and the private sector. And that's what we're going to be talking about today, is to find mechanisms and pipelines of projects which they can invest in and mechanisms to attract finance to those projects. So we're going to be talking about that over the next hour. We've got some great people. Stewart Maginnis is going to be up shortly, Global Director of the Nature-Based Solutions Group at IUCN. Gustavo Fonseca, from Head Director of Programs at the Jeff, is going to be giving us another keynote, and followed by Edith Kiss, who's going to tell us about the new fund. She's from Mirova Natural Capital. And then we've got 4 panelists to discuss what they've heard. And I'll be trying to jockey around with them to answer your questions that you might have in your mind, but really what's on their mind too. And there's a chat function, which you can see. For those of you who are familiar with Zoom, you probably know about the chat function. You have a look down the bottom, see chat, click on that, and you can post your chats, post your thoughts, be interactive. We want to hear what you're thinking. But if you've got key questions, put them in there. And when we get to the end, I'll try to find some time to answer a few of those questions. But it's always good to put your thoughts down, because that chat gets picked up and goes into the mix of things afterwards. So don't be shy, engage. And there's about well over 1,000 people on this event today. So welcome to you all for the launch of this Accelerator Fund. So I'm now going to turn to Stewart Maginnis, who's going to tell us a bit more about the work of IUCN and his work at the Nature-Based Solutions Group. Stewart, you have the floor.
Okay, well, thank you very much, Andrew, and good afternoon, good morning to you all. I'm here actually in place of my Director General, Dr. Bruno Oberle, who unfortunately was taken ill over the weekend, so he asked. He's now recovering, and but he did ask me if I would step in for him. So I'd like to maybe just start off by reflecting that certainly when I started my career in conservation, when I had a lot less grey hair, that we used to complain that that the environment was the Cinderella pillar of sustainable development. It was fine for economics, it was fine relatively on the social side, but people forgot about the environment. Well, I would actually say we're at this point now that is no more, and certainly not when we look at the issues of risk. And one only has to look at the World Environment, or sorry, the WEF, the World Economic Forum 2020 Global Risk Assessment Report, which was actually quite heavily dominated by environmental factors, certainly when one looks at long-term risk. And we can absolutely see this now, I think, with the uncertainty that we're facing today, that we see the convergence of three crises that in one shape or form have had some links to the environment, some explicitly, some less. The most immediate is the public health crisis in the aftermath of the public health crisis. There is the climate crisis, and there is the biodiversity crisis. And so the very fact is now, for maybe the first time, certainly the first time I think in my career, one actually starts to see the role of the environment and the role of environmental mismanagement, as Andrew was highlighting, starts to become real. It's no more just about undermining species or making endangered species disappear. It actually is about eating away at the fabric of our societies, our culture, and our wealth creation. And this message was actually recognized very, very clearly by the authors of the global assessment on biodiversity and ecosystems from IPBES. And they stated their very, very first key message was, nature is essential for human existence and good quality of life. Most of its contribution to people is not fully replaceable, and some of it is irreplaceable. And then they go on to give an example. They highlight, well, we've seen a fantastic increase in agriculture productivity and food productivity since the 1970s, that 14 out of the 18 categories of contribution from nature to food security and productivity have been on the decline. Now, I think this also means that if the environment is becoming a major issue for not just for conservationists but for all of us, then it needs all of us to actually start to address that and to address these interlinked challenges. And that is certainly why we believe we really need to see proactive engagement from the private sector and from investors. If we don't have that engagement, then I think we're starting off at a significant disadvantage. Now, there's two problems, and Andrew's mentioned these before. One is the volume of funds going into environmental mismanagement. A report came out last week estimating that in 2019 alone, there was $2.6 trillion of loans going into environmentally negative investments. And then at the same stage, we don't have a robust and solid pipeline of nature-based projects that offer an attractive return to investors. So IUCN is committed and convinced of the importance of working with the investment sector, because we feel their involvement is absolutely essential if we are going to go to scale and if we're going to meet these challenges, these societal challenges head on. There's two areas that I think are encouraging, and the first is that while we've often once heard there's not enough money going into nature, there's not enough money going into nature, we also have seen that there is both the willingness in the investment community and there are the resources to actually to be channeled into into nature-based options. The problem is, as I mentioned earlier, we need to get that pipeline up and running. The second, which IUCN has been working on, is I think this whole framework now of nature-based solutions, which is not just a phrase, not just another little framework. It is actually a new conservation paradigm that really puts nature, natural resources, and the sustainable management of ecosystems at the heart of delivering and addressing against key societal challenges: climate change, food security, land productivity, etc. And so I think we've got a willingness from the investors, and we now have actually got a robust conservation framework, which I think we can bring together. So I'm really pleased that IUCN is here, and I'm personally pleased and excited to be here at the launch of this innovative and catalytic financing instrument, the Nature Accelerator Fund, which really will provide measurable conservation and societal benefits while delivering financial return.
Thank you, Stewart. I'm afraid we're going to have to move on.
Okay.
In the interest of time, I think you got all your points over. Thank you so much for standing in as well at short notice. Very helpful. So really interesting to hear. So it's about pipeline, it's about nature-based solutions. So we're going to turn to Gustavo Fonseca, who is Director of Programs at the Global Environment Facility, which is housed in the World Bank. And it's a very large grant-giving institution, giving away almost $1 billion annually in grants. Gustavo, what's your perspective on what we need to do?
Well, thanks very much, Andrew. It's a great pleasure being here with you today in this event, which is launching the Nature Accelerator Fund. As you have seen in the program for the event, the Global Environment Facility, or the GEF, as we like to call it, is an anchor investment to the fund and has secured $8 million in risk-tolerant concessional financing, which should be directed for nature-based solutions, as Stewart just mentioned, for projects that do have that feature and that show potential for scaling up. What perhaps you don't know much is what the GEF is. And allow me to describe just a bit who we are and how we operate. The GEF is a partnership of 183 governments, international institutions, civil society organizations, and the private sector who work together to undertake actions to protect the global environment in developing countries. The GEF came about in 1991 as a pilot program of the World Bank, but when the biodiversity and the climate change conventions were agreed a year later in 92, it was decided that the GEF would be entrusted with the provision of support for developing countries to help meet their obligations with these global conventions. And since that time, we have added other conventions to the mandate of the GEF, such as the Stockholm Convention on Persistent Organic Pollutants, the UN Convention to Combat Desertification, and the Minamata Convention more recently to combat mercury was also included in our mandate. Since our inception, the GEF has provided $18 billion in grants and mobilized $93 billion in co-financing from other sources for more than 4,500 projects. The GEF has also developed blended finance solutions since it began, and in that modality, it has invested more than $800 million in 98 blended finance projects, which mobilized $8 billion in co-financing. Still, what these numbers hide, or perhaps they don't hide, is that for the mission of the GEF, resources have been vastly insufficient to start bending the curve for biodiversity, for climate change, for land degradation, and other topics. So there are several estimates there, but for biodiversity alone, the financial gap is immense. And it's being estimated to be between $600 and $820 million a year. If you look at the figures of the recent Pulse and Cornell TNC report on financing nature. So in an effort to make GEF resources have a greater impact, recently we have adopted an integrated approach that addresses the drivers of environmental degradation by, number one, promoting and stimulating government action, and by helping to enact proper policies and incentives. And secondly, by upscaling our private sector engagement and our investments with private sector. We are actually in the process of approving a private sector engagement strategy with our board that will expand opportunities for the private sector to play a much larger role in the design and implementation of GEF-funded projects. In addition, we seek to join platforms of like-minded stakeholders that seek to address nature loss through initiatives such as what Andrew mentioned earlier, the Task Force on Nature-Related Financial Disclosures, the Business for Nature Coalition, and also the Fashion Pact, which was recently launched with JEF support. As important, we also ramping up investments in private sector-led initiatives through our blended finance program that we call the non-grant instruments window, NGI, to contrast it with the predominant modality of the JEF, which has been grants. A non-grant instrument in the context of the JEF is a financial product in a form that has the potential to generate financial returns, for example, through equity, debt, guarantees, and other instruments. The NGI, or the blended finance window, aims, number one, to enhance our effectiveness by leveraging private capital. Number two, strengthen partnerships with the private sector. And finally, enable the JEF to demonstrate and validate the application of innovative and flexible financial instruments in projects seeking much broader adoption. The JEF has been quite successful in blended finance for renewable energy and energy efficiency projects, for instance. However, investing in nature, as we heard earlier, is quite challenging, as the risk and the return of conservation investments do not match the appetite of private investors. So we are talking about very long tenors, limited sources of cash flow in the early years, natural risks and uncertainties that investors do not understand yet. So you add to this uncertainties on operating in emerging markets, so we have a perfect storm. So blended finance is one of the tools that we can use to help address these risks, as we did successfully in the past with renewable energy, for example, to make private institutions and investors a bit more comfortable with these frontier investments. So to conclude, the JEF has been a member of the Coalition for Private Investment in Conservation, CPIC, for many years, and now we welcome Mirova into the partnership through this fund. We believe that this unique partnership shows great potential for the community to make strides with projects and structures that mobilize capital at scale for biodiversity conservation and for natural resources management. This is why we are so pleased to be here with you today for the launching of this fund. We believe the fund can help incubate and accelerate conservation investments in developing countries that will ultimately create a track record of bankable projects that perhaps one day, if we dream far enough, will not require any additional donor support. With that, Andrew, I turn it back to you, and thank you very much for the attention of everyone.
Gustavo, thank you so much for joining us. We're now going to turn to hear all about this fund, the Nature Accelerator Fund, which provides measurable and science-based conservation and social benefits whilst delivering financial returns for investors, which of course is what they want. We as conservationists want to get a good payoff for nature and for the people who live there. But if it's an investor, they need their money back with a bit of profit. Otherwise, they're not going to give it to you. So Edith, you are the Investment and Development Director at Mirova Natural Capital, and you're managing, the Althea Climate Fund, which is 100 million. In fact, Mirova has got a whole portfolio of funds which are dedicated to this really cutting-edge frontline kind of investment. Tell us how this new fund is going to work.
Thanks a lot, Andrew, for this great introduction. Good afternoon, good morning, everybody. It's a great pleasure to be here today participating in this webinar. A lot of effort and many years of work indeed has been put into an initiative, what is called a Conservation Finance Initiative by IUCN and JEF, as we have heard, and also more broadly the CPIC coalition. And more lately by Mirova, who has been appointed by IUCN as the investment manager to this new initiative. So today, we are very pleased to share with you the results of approximately a year of collaborative work between these organizations, which is basically a first of its kind accelerator fund, aiming to fill a very important gap on today's natural capital markets. It is still a project, so the fund is not incorporated yet, I must caveat that, but today, officially, we are ready to start taking investor commitments, and we are also starting to build the first cohort of projects that will be ready to receive the funding after the first close. I'm going to share now my screen. does this, how does this accelerator work? Basically, this accelerator is taking an investment approach and has an inbuilt funnel to bring projects from early stage in need of small seed capital, typically around $100,000 through early venture stage, around a $1 million ticket size on average, up to venture, up to the 5 million ticket size. With a target of about $50 million fund size, we expect to be able to fund about 50 seed investments, seed projects, that hopefully will turn into 15 early venture projects and eventually become a larger investments of a 5 million of size. And together with this approach, we aim to generate about 150 million, catalyze about 150 million additional follow-on investments for the broader market. So as you can see on this chart, basically we have designed an acceleration through these 3 steps. In the seed, typically in the seed window, where we expect most of the projects to enter the fund, although they could also enter in the second phase, the early venture. We are aiming to have a simplified and smooth and streamlined investment process to be able to deal with such a large investment project flow, which is not very typical for investment funds, and a two-step assessment process, but again, something much shorter than the typical full-fledged due diligence process that can take up to 6 months. In terms of instruments, we're aiming for standardized terms, typically convertible notes or repayable grants. So something, again, simple to make it efficient. In the early venture window, we will already have a more in-depth screening process and more tailored financing instruments, which could take typically the form of equity, loan, or revenue participating loans. And finally, in the venture window, that's really something that is more common already on the market and would follow the typical investment, two-step investment process and full-fledged due diligence. So who is this accelerator for? Basically, on this slide, you can see the investment focus of the fund. It has 4 pillars, focusing on ecosystem conservation and restoration, which is targeting high conservation value, high biodiversity areas of typically forest conservation, restoration across different terrestrial ecosystems, using different payment for ecosystem services that can be carbon credits, which is currently quite exponentially growing, but also other ecosystem service payments and markets, typically biodiversity, which we think there is a huge potential, and as we heard, there is a need for. The second pillar on smallholder production systems and sustainable agriculture, typically more around degraded land restoration in buffer zones, using agroforestry, other crops, and also taking a step ahead above, so further down the value chain around processing facilities or connecting farmers to markets, which again is not always the focus of investment funds. The third one is going beyond terrestrial ecosystems, marine conservation, coastal protection and resilience, really targeting the full spectrum of blue economy from aquaculture, fisheries, mangroves, marine protected areas, and again, quite an interesting potential with blue carbon, for example, which is a more nascent niche market in the carbon markets. And finally, we also included innovation in services, finance, and technology, which is also quite important, where the impacts maybe can be a bit more harder to quantify, however, can have a systemic impact, systemic effect on the market, and we think there's a big role for that. And again, also sometimes are left behind by the more traditional project-based investment funds. In terms of the KPIs, impact KPIs, what we are looking for, you can see here the main 4 around biodiversity conservation, typically reducing the extinction risks of IUCN red list threatened species, obviously ecosystem conservation and restoration, and also contributing to the UNCCD land degradation neutrality goals, climate change mitigation adaptation, and in line with the Paris Agreement targets, as we have heard, that's a very important one. And last but not least, inclusive and equitable sustainable development, also very important for SDGs and including gender equity. The fund is targeting a 50 million size, with the first close around 10 million as a target by end of Q1 next year. It's a blended finance structure, layer structure, with a 30% first loss protection target, of which already 8 million secured by the GEF support, and a 10-year horizon for this first fund, and Luxembourg-based fund. So these are basically the main parameters, and again, trying to bring in an investment approach to where today we have more of a grant and donor approach. So why get involved with this accelerator and with this partnership? First of all, we think it's a novel approach for an asset manager. It's not the typical business, as today we see that there is the incubation and acceleration in this market is mostly driven by donor funding grant approach. So we really believe there is a need for it. There is a gap on the market, which we are here to fill, in hoping to fill with this innovative fund. But it's heavily dependent, and as we discussed, on the blended finance approach and on the junior capital. We are still in need for additional capital in that, so we're happy to discuss with any of you if that's of an interest, as the impact and the catalytic approach will be highly dependent on support from additional junior first risk funding. The fund or this accelerator is a broad and has an inclusive approach, inclusive scope, as you could see, includes a very broad sectoral approach from oceans, forests, agriculture, technology, across all the developing countries. So there are many approaches or many funds and incubators as well that have a regional or sectoral focus. However, this is a very broad approach, so we're hoping also again to help catalyze the whole market and create additional pipeline for all. It's a collaborative effort, as I mentioned, between a leading conservation NGO, IUCN, and a leading natural capital asset manager, Mirova, supported by the CPIC network as well. And we hope to have other partners too in the future. Our idea is to complement existing initiatives and not to crowd out them. So we really dare to find synergies and collaborate, and happy to hear and please again get in touch if you would like to collaborate with us in that. And finally, impact and innovation is at the core of this fund. We will require measurable positive impacts first, with a very clear theory of change, how the impacts will be achieved, obviously coupled with financial return, scalability, replicability, in order to help grow this market. And also we will go beyond what we already do and try to do even more innovation. That is why our extensive partners and this network is so important. We will try and test out the new standard that IUCN has developed, the global nature-based solution standard. And we will also test new tools like the STAR, species threat abatement and recovery metrics of IUCN, that we really think could help catalyze the biodiversity markets, which are way behind the current voluntary carbon markets. So this is this is my quick summary. I hope, Andrew, I didn't go over my time, and we'll now stop.
Thank you, Edith. We're good for time. Just since we got you, I just want to ask you one question. I mean, I often hear people say, there's plenty of money around, but there's just not enough projects. And you think this particular fund, I mean, there are a number of funds like this in the world, but this one is really focused on the cutting edge of developing pipeline, as far as I can see. There's a lot of other things that it's doing, but can you just give us one quick sentence on how is this going to really help incentivize people to develop pipeline or help those projects that are nearly ready for investment to become investment grade?
Thanks, Andrew. That's a very good point. So again, we do see a lot of efforts, has been gone into catalyzing pipeline. Pipeline is key. We need to go, an order of magnitude higher in terms of this market size. There is a lot of donor funding. There's a lot of money going into pipeline. However, in the current markets, there is no connectivity. There is no clear funnel how projects that are getting initial grant support will actually reach effectively, efficiently the investment capital. So there is still a gap, and projects still are left with many years. We're losing years while they're trying to jump from the grant funding to the investment. So we hope that with this fund, we'll be able to fill this gap with an investment approach. So taking early on projects, and again, therefore we need to rely on still also donor funding and junior capital to be able to do that, and accelerate this so that projects have a clear pathway and can very much faster go, because again, we're running out of time and we need to grow this market for all of us. So I think where we are trying to innovate is to create this clear pathway through this fund across the globe, across sectors, no silos, and hope to grow the whole market at the same time. And at the same time, in parallel, next to that, again, focusing on areas where we think there is not enough effort going on, like carbon, again, is a market segment that is growing quite fast, a lot of attention going there, which is great. But for example, biodiversity, as we heard, nature is still very hard to materialize, to work on that. So we hope to bring some innovation on those segments too.
Great, thank you, Edith. Well, the clue is in the name. It's called an accelerator fund, and we need to accelerate finance for nature. That's absolutely certain. We've had the report earlier this year from the World Wildlife Fund saying that 2/3 of our species populations had disappeared over around about the last 50 years. We're not winning this battle, and it's not surprising because there's a tsunami of money that's flowing around the world, as I said at the beginning, doing the wrong thing for nature. And these are the sort of cutting edge steps of how we can try to harness that money, because you can't defeat it. You can only harness it to our own ends, to protect nature and to make it work in a different way. And this is not just the beginning. People have been working on this for some time, but putting together this kind of fund is absolutely crucial. So let's pick it apart a bit over the next 20 minutes or so with our panel. And I'm going to introduce them as we talk. We've got Avril Benchimol. We've also got El Medina, who is a Forest Conservation Program at IUCN. Avril is from the GEF. And we're going to have a couple of others. Where's my list of them? Yeah, John, my old friend John, who's going to be talking to us. John Tobin from Cornell University. We'll talk to John in a minute. And then Vincent, who is going to be telling us more about Mirova and how that works. So let me first of all come to Avril. Avril, you're the leading specialist in blended finance, at the GEF. We've heard a bit about GEF. You're managing a program of about 230 million in active project, pretty big portfolio. So excellent work. So, the GEF is normally a grant giving organization. It's giving out about $1 billion a year. This is quite new for the GEF, isn't it? To start putting its money to work with investors and looking for something that might actually produce a return. Can you tell us why the GEF is doing that? And haven't you already got enough money with $1 billion, or are you trying to get some more from somewhere else? What's it all about?
Thank you, Andrew, and I'm very pleased to be here this morning. So just to go back a little bit to one of the first points of Gustavo, the GEF has been using non-grant instruments since our inception in 1991. We were conceived like that. However, that was way before the blended finance term was coined. And therefore, this is a pretty recent trend in the last 10, 15 years. The GEF has focused more precisely in using these non-grant instruments, so everything that is non-grant, debt, equity, guarantees, etc., to mobilize private sector investment only more recently. That is from 2014, so 6 years ago, in which we had our pilot program to basically test how our non-grant instruments could leverage investors' interest in environmental areas that are challenging. And what we've seen originally, and that is no surprise for most of you, is, as Gustavo mentioned, there was initially a lot of interest in climate change mitigation, testing new technologies, financial structures that would share the risk amongst various stakeholders, and that proved to be successful. But what we're seeing more recently in the last, I would say, 5 to 6 years is increased interest in new frontier areas, such as land degradation, biodiversity, international waters, and chemicals and waste that we focus at the GEF. And how do we know that? Well, we know that because we basically choose our projects through open calls for proposal. So basically we go through our partner agencies and seek for proposals that will be well fitted for our support with these non-grant instruments. And what we're seeing is that 2/3 of all interest received in the last 2 years is basically geared towards a multiple benefit for the environment type of project. What do I mean by that? What I mean is that so 10 years ago, 8 years ago, most of the projects would look for specific type of global environmental benefits in one area, like climate change mitigation. You were mentioning before, Andrew, with a single currency, that is tons of CO2 avoided. But now we're seeing more and more projects that are designed to actually have benefits, not only in climate change mitigation, but together with land degradation and also biodiversity. Why? Because all is integrated and interlinked. And so as we are seeing this type of trends, we are enthusiastic about it, but we're also seeing all of the points that have been raised by the various panelists before, which is blended finance structures are very challenging in these areas. I don't know if you maybe are aware of the latest report of the blended finance state of the market that was issued last week by Convergence. They specifically focus on blended finance projects that mobilize private sector investment, not blended finance in the broad OECD term.
I want to ask you a question. Not everybody may know what we mean by blended finance. Can you explain what that means? I know what it means, but you tell the audience, what is a blended finance fund?
Sure. So blended finance, what it means is combining. So blending is combining different sources of financing that have a component that is concessional, so at softer terms that you would find in the market, together with market terms or market providers of commercial finance. And by blending or combining those sources of financing, we can reach the types of risk and return profile for investments in projects that are acceptable for private sector investors. So for example, Edith was mentioning before that this accelerator fund is a blended finance structure. I mean, it's a result of a blended finance structure. Why is that? Because the GEF is putting an equity investment in the accelerator fund that has a junior position and softer requirements for return than other types of equity investors would need. So when you blend that type of lower requirements on our side with the overall a pot of money that we hope to mobilize, it helps us bring other types of returns from other investors at a higher level, that, in this very specific equity investment.
GEF is picking up some of the risk that the private sector investors wouldn't be prepared to take for themselves. And that attracts, like a magnet, it attracts money in to these funds. So you think your 8 million, which provides that kind of special first loss guarantee, in a sense, helps to be quadrupling or trebling or more the money coming in from other investors.
That's the idea, yes. With our first loss junior equity tranche, we are hoping that the magics of the blending will reach risk and return profiles for other investors to come in at $50 million or more, right, Edith? Like talking about this a lot. So yes, that's the idea. Basically.
Well, perhaps we should move on a bit to, may come back again later
sure.
When we have a little time to see how we go at the end. But El Medina, Look, you're working for the IUCN, which is the biggest collection of scientific brains on the planet that are trying to figure out what we do with biodiversity. You must have lots of people working extremely hard, coming up with wonderful projects that they want to get funded. How are you channeling these sorts of projects and getting them ready to go into this accelerator fund?
Right, well, thank you, Andrew, and thank you for the introduction, and good morning to everybody. As it was mentioned, my name is Elmedina Krilašević, and today I can speak on IUCN's efforts in boosting private investment in nature. So going back to the question, I think there are several critical elements that the conservation community, as you mentioned, Andrew, the collection of all the practitioners, scientists, and so forth who are working on this issue, that what they can make in terms of attracting investment in nature. Today, I can reflect on two, I think, distinctive types of such contributions that are important for our conversation. The first type would be the contribution of our thought leadership and our role in communicating objectives and our collective action in order to set the path for our shared understanding and norms about how society should govern the use of nature and natural resources. And the second type is about what the conservation community role is, and that role can be critical in mobilizing investment pipeline development and blending public and private resources at the ground level. In order to build this shared understanding, the conservation community has a critical role in setting the standards, showcasing best practices, also creating opportunities for collaboration, for example, the collaboration between private sector and the governments, but also notably through the collaborative platforms. And usually this type of collaboration leads to taking actions that is informed by scientific evidence. It usually spurs the use of most appropriate knowledge, whether global or local knowledge, and available technologies, and it's also driving transparency and accountability. I can give you a few examples of where IUCN is raising the bar, that is, helping us also mobilize private sector finance. So IUCN has been for quite some time championing, as Stewart mentioned, nature-based solutions, and the role of nature-based solutions that is defined as actions to protect, to sustainably manage and restore natural and modified ecosystems, to address societal challenges, both effectively and adaptively, while also we are providing human well-being and biodiversity benefits. So until recently, there has not been a consistent or reliable way for us to measure effectively what NBS is. How do we define those sustainable actions on the ground, and how do we monitor the progress? So in that context, IUCN has been working for the past 2 years in a collaborative manner with stakeholders from over 100 countries to develop this facilitative framework. And we have launched a global standard for nature-based solutions last year, which is the first ever tool that really translates the NBS concept into targeted actions. And this is what we need, targeted actions on the ground to implement, but also to reinforce the best practice. Which takes me to the best practice issues. And I think there are many examples of what we are able to highlight in terms of the accomplishments and on the implementation of, for instance, restoration commitments, ecosystem-based adaptation, disaster risk reduction, just to name a few key examples of the contributions of my organization, but there's much more. There are many more other initiatives, and the conservation community as such is working tirelessly in pursuing these opportunities to create action and ambition that is on both advancing environmental and also economic development outcomes.
Can you tell us a bit, Avril? I just want to get, you talk about standards, and standards is a really good thing, but what really interests me is that you've got this huge potential pipeline coming through, and the work that CPIC has done to try and get things ready. You're dealing with a community often who is used to grants, and there's a huge amount of education that has to go on with local communities who are actually implementing the projects on the ground. How do you see a way of, translating these sorts of projects, practical work on the ground, into something that funds like this can put their money in and get their money back again, unlike a grant?
I think that's a great question, and sort of absolutely, it's important. And I would say, we can always do better. And now it's more essential than ever that we actually do so, that we do the work more intelligently within the boundaries of our planet, while simultaneously we actually help our societies to cope with the crises and ameliorate constant stresses to our health and to our livelihoods. And this is where the private investment interest kicks in, and this is where we're building that common ground. So the conservation community needs to work alongside with the champions and leaders in the private investment side, and also with the bold public investors that recognize the cost effectiveness of the public money when it's being put to work with the private capital. So when it comes to unlocking the investment pipeline, the conservation community possesses the experience and knowledge that we need in order to create innovation and the societal transformation. So coming back full circle to our topic today, the Nature Accelerator is how we do it, and this is how we do it better. We have utilized the best of what is currently available from the public sector, from the conservation science, and it's led by prudent investment practice to create a truly intelligent and practical investment vehicle. You can compare the accelerator to the intelligent worker bee that pollinates this conservation and business opportunities that we're seeing around us. And it goes offering also learning opportunities for both conservation and the finance sector. So in that context, this fund is innovation in itself, and it can be, and we are looking for the opportunities in terms of being able to replicate that in the regions, like in the landscapes, to further upscale these financing opportunities. So perhaps I can close by saying that we truly, stand by the fact that this Nature Accelerator is blended finance at its finest.
Excellent. Thank you very much.
Thank you.
In the interest of time, Medina, we'll have to keep moving. Thank you so much for your remarks. John, we talked in the early part of this panel about where the projects are coming from and how to get them ready. Where's the money going to come from? That's something you know about. You've been working on this with a team at Cornell and produced right at the heart of producing some major reports that have come out already this year, and a book still to come on how we can go about investing in nature. Where do you see the money coming from? How do we fill the financing gap for nature?
In a nutshell, we have a lot to do in terms of filling that biodiversity financing gap. And we are in the enviable position, however, that there is quite a bit of demand for conservation investing. There's a lot of interest, which started with individual investors, but has now progressed further. And there are institutional investors out there that are saying, okay, biodiversity investing, the SDGs, how can we support this part of the sustainable development agenda with our own investing? And you alluded to this report issued recently or prepared recently by the Nature Conservancy in Cornell, working with actors also at the Paulson Institute and Columbia University, where in the end, and in what we feel is probably the most comprehensive set of data put together recently on what current spend is in conservation, we ended up with an estimate in the order of 125 to 145 billion per year that is being spent on conservation. However, if you compare that amount, which already sounds large, with what the needs of conservation are, the amount we came up with there was in the order of 800 billion. So this biodiversity financing gap that you alluded to is roughly 700 billion per year. How are we going to close that gap? That is easier said than done. But as I said, and this is really important, there is willing capital. What we are lacking are good and attractive transactions that can be put in front of that willing capital, of those willing investors, that will be the sort of deal that they feel they can invest in. Because most of these investors are not going to invest on a concessional basis. They will be looking for returns. They will be looking for competitive returns. Of course, that is a lot easier said than done, but that is one of the objectives of CPIC, to facilitate not only the dialogue between finance and the conservation sector, but the bridging of the gap that is needed to develop transactions that deliver financial returns that conservations don't necessarily understand as well as they might, with environmental returns, which finance types may not understand as well as they might. So it's that coming together of knowledge of actors that is important.
John, you used to work for Credit Suisse, big bank, a big Swiss bank. When you were in that bank, if you were looking at this accelerator fund now, would you say this is just the kind of thing we need? Are you going to be able to attract in the investors into this fund?
Yes, and you raise an important issue. I wouldn't want to speak for my former colleagues at Credit Suisse, but the fact is, if this is going to be a field that attracts a lot of private capital, we are going to have to graduate from the stage where we are now, in which there is a smattering of sort of very interesting, very innovative transactions, most of which are pilots, most of which are small, into a sort of very different world, where we take a quantum leap and we go from this more experimental stage that we have been in, when fantastic things have been done, don't get me wrong, but the next step is going to be something much more complex. And as you know, you and I have communicated about, Andrew, in our collaboration and connection with this sort of revamped version of the Little Biodiversity Finance book, which will be coming out and which we're now calling the Little Book of Investing in Nature. If we're really going to succeed, we will have to see the development of a financial ecosystem for biodiversity, for lack of a better term, the way we have seen it develop in renewable energy, and particularly in the case of the US for low-income housing, where there is an underpinning of policy that creates the right incentives for private actors to invest in the space, where there are a number of service providers that facilitate the execution of transactions, where individual transactions are not highly customized and therefore have huge transaction costs, but rather a system in which service providers, facilitators, aggregators, large financial institutions, and blended finance support, which Avril Benchamal has spoken about, and crucially, in connection with blended finance, de-risking will all come together, facilitated by the right policy frameworks, to lead to that sort of that quantum leap I alluded to into a new and much more mature system.
Well, thank you, John. In the interest of time, we want to just leave a little time for a few questions that I can see coming through on the chat. So I'm going to turn to Vincent Gratt, who's Managing Director of Mirova Natural Capital. As I mentioned before, this is one of the leaders in investing in nature, one of the pioneers, been doing it for more than 10 years. Vincent used to be at AXA, a huge French financial institution, and also spent a long time working at the front line out in Indonesia. Vincent, you've got the keys to investing in nature at Mirova. You must be excited by this fund. How do you think it's all going to work?
Yeah, no, it's going to work, and I'm going to blame the other panelists because I've got 2 minutes left, so it's a bit of a challenge, to conclude and to explain everything in 2 minutes. But I just want to spend 1 minute maximum, on what is Mirova Natural Capital, what we're trying to achieve, what's our DNA, and explain why this fund is so important to us. So just to take a step back, and again, very quickly, because we don't have a lot of time right now, but you know Mirova. So Mirova, that's just the sustainable impact investing arm of, the Natixis group. And then you've got Mirova Natural Capital. And we embarked on just focusing on natural capital investment. And we embarked on a journey 8 years ago with the Altelia Climate Fund. And this fund was clearly an early mover. So we were trying to implement, crazy early stage agroforestry, reforestation, sustainable land use projects to bring this project to scale and to eventually show that the model could work. So it was very much a try and learn experience. We had many successes, we had challenges as well. We still have issues. But, from this incredible experience and learning, we decided to continue the journey and we launched 7 funds. Now the platform is very different. We are managing $600 million as we speak. We've got a large team that's pretty unique in the space. We've got almost 40 people working full-time on this kind of solutions. And you could say that, it's not too bad, but as mentioned before, it's clearly below target. It's not on us, it's not, we need much more capital, we need much more in the space if we really want to move the needle. So our ambition is to reach 1 billion very quickly in the space and to be able to attract more and more institutional mainstream investors. And it's why it's interesting in terms of development. And it's why, I really want to say that this opportunity is wonderful, is that in our opinion, you've got 2 pillars. If you want to achieve this kind of growth, and if you want to be basically successful with this kind of plan, you need to have these 2 legs. The first one being, yes, you need to launch fund where you need to target scalable, more mature projects, and that's the way you're going to attract, again, more capital in the space, and that you're going to deal with more and more institutional investors. But you need to innovate, you need to explore, you need to try again. And there are so many opportunities these days, there are so many things to try in so many geographies, and it's constantly moving. And this fund is for us a unique opportunity to keep this leadership, to keep the innovation spirit we have, and to make sure that basically we create for the market the pipeline of tomorrow. And that's incredibly important. And we are very grateful of the partnership with IUCN, obviously with the GEF and the commitment of the GEF, because obviously the only way to make it possible is to leverage on blended finance today and to make sure that basically we put the blended finance at the right level so that basically we can offer to other investors a unique opportunity, to be part of this journey, to be able to play a very important role in the market, to innovate, and in the meantime, to have, some security or some form of, peace of mind when investing.
That's all. Thank you.
I bring a question. I try to be brief. That's a 2 minutes.
You did a really good job, and we are officially just with 2 minutes left. I don't know if we can run over, but I think there's a question here that's coming in that I want to ask you, and I want to come back to the panelists and just be ready. I want 2 words from each of you, which sum up what you think is the most important thing that's got to happen in the next few years. So I'll come back to you in a second. And so here's one. It's an interesting one. He said somebody's saying here that it feels very much like a global north approach. How can you ensure that equitable, sustainable development will be ensured and that there will be support getting through to the indigenous economies and communities?
That's a big question. It's almost impossible to answer this one in 20 seconds or 30 seconds.
I don't know.
Just to tell everybody, that's very much what we're doing. So, and we've been doing that for the last 8 years. So what we always design in terms of solution is basically supporting projects. It's making sure that basically you've got first solutions, project, investees, companies where you take into account local communities, where your social impact is equally important. And then when you've got a fair share of return as well. So you just want to make sure that, in your business plan, when you try to scale up, basically you just want to make sure that there is there is an equilibrium. And again, a fair share of returns between communities, local communities, stakeholders, other local stakeholders, employees, and investors on the farm. So it's very much part of our DNA.
A word equilibrium is one I like. That's why I called my company Equilibrium Futures. We've got to get back to a better state of balance between financial capital and natural capital in the future. Well, we're out of time, folks, and I know there were some other questions, but I'm going to go around the panelists. So I'm going to ask Avril, what's your 2 words that we need to do in the future?
I don't know if what we need to do, but what I'm hopeful about is
just 2 words, real quick. It's got to be done.
the Task Force on Nature-related financial disclosure. That makes me very hopeful, because if we measure that risk and if we measure nature,
That's more than 2 words.
Okay, so sorry,
Force.
but let me. It's the TNFD, and
TNFD.
the second one, for people who do not know what the TNFD was, the second one is using bonds as a structured product for wildlife conservation. And for that, I'll defer to a type of product that we hope to issue later this year for rhino conservation.
Thank you.
I'll leave it there.
Edith, you got a couple of words for us? Couple of words, just summing up your hope in the future. If you could have your mics ready, off mute, so that you can speak. Edith, go. Just a quick sum up. 2 words.
Thank you, Andrew. Yeah, we hope to scale up the market.
Scale up. I like it.
Yeah.
Scale up. That's enough. So, Medina, what are your 2?
Well, thanks, Andrew. I will say that we will connect nature-based solution standard with the investment pipeline and showcase the credible outcomes from that process in terms of conservation outcomes.
That's more than 2. That's quite a lot. Standard, I think, is it? John, what do you have for 2?
2 quick things: new product development and political will.
Fantastic. Thank you very much. I hope you'll all thank our panelists for their excellent contributions and the keynote speakers who are on at the beginning. I should tell you that for those of you who posted your questions, we haven't had time to answer them all. They will be answered on the YouTube chat in the next few days. And you will be able to find a recording of this session on YouTube. If you just go to the IUCN YouTube channel, you can watch it all over again, or tell your friends. Spread the word. We're accelerating finance for nature. Thank you very much, everyone, and have a good day.
Thank you.